Yeah, I think it's okay now. There's a little bit of echo in the hall, but I guess you will be able to listen to whatever I'm saying or not saying, because sometimes the regulator also doesn't say many things but conveys it. So I'm sure you will be able to get the sense of it. Uh, Chris Gopal Krishnan, distinguished participants, members of the audience, members from the media, and all the leading representatives and participants, big or small, that is irrelevant, from the fintech sector. I am delighted to be here today in the third edition of the Global FinTech Festival. I would like to congratulate the organizers, in particular the National Payment Corporation of India, the NPCI, the FinTech Convergence Council, FCC, and the Payment Council of India, PCI, for organizing this event. The theme of the event, creating a sustainable financial world, is very relevant in current times. As Mr. Gopal Krishnan said, the representatives of all these three organizations, they met me. I was extremely delighted to hear that, after 2 years hiatus, after 2 years gap, you were able to organize this. And it is indeed timely because, especially during this pandemic period, it's technology, it is innovation, it is fintech, which ensured that as a country, the economy, the financial markets, and all activities, continued as usual, despite the hugely disrupting impact of the COVID-19 pandemic. In recent years, India has witnessed, as all of you would be very much aware, India has witnessed rapid progress in financial services sector. Technology, innovation, and fintech are working in tandem and contributing to the dynamism of this sector. In our journey towards higher levels of sustainable development and financial inclusion, these forces have morphed into force multipliers. We have leveraged a lot on these forces. We need to leverage even more. In fact, the theme I have chosen for my address today is fintech as a force multiplier, because we see a lot of opportunities not only for enhancing the scope, enhancing the the width and the depth of all that is happening in the fintech sector, but the way it can deepen financial inclusion, the way it can enhance and broad base its footprint in the journey of our country towards 2047. I think there is a lot of potential, and together, if all of us, that is the regulator and the fintech players, if we work together, I think we can create several milestones in our journey towards India at 2047. Let me now get down to the specifics. There has been exponential growth of technological enablers in India. Telecom penetration, availability of internet services, adoption of technology in facilitating access to credit, more efficient payment systems, and deepening of financial inclusion have made significant progress and are continuing to progress further. The total number of these numbers are known, but to put things in perspective, let me again reiterate, the total number of broadband internet users in India stood at 80.7 crore at the end of July 2022. Similarly, with more than 46.5 crore Jan-Dhan accounts, 134 Aadhaar enrollments, and 120 crore mobile connections, new opportunities are opening up for implementing innovative ways of integrating and delivering the various types of services. This can be gauged from the emergence of 100 unicorns in the country, with a record of 44 unicorns established only during last year. For any society aspiring to grow faster, its financial institutions must be robust, efficient, and accessible. The next decade of finance will be more focused on two central themes. One, sustainable development, and two, technology-led innovations transforming the lives of the common people. Therefore, sustainable development and ensuring a resilient financial system, they form the fulcrum for our policy architecture. As we have all witnessed, technology has been central to the resilience in the face of COVID-19 pandemic, particularly during the lockdowns imposed around the world, not just in India, but in several countries of the world. As you are aware, the degree of lockdown varied, but almost every country saw various forms and degrees of lockdowns. It has also been, that is, technology has also been central to our response to the crisis and in supporting recovery. Technology coupled with finance safeguarded the economies by ensuring seamless disbursal of loans, robust 24/7 payment systems, access to financial markets, insurance, MSME credit, pension services, and direct benefit transfers. As per the World Bank, at least 58 governments in developing countries alone have used digital payments to deliver COVID-19 relief to their citizens. The scale of operations in this regard in India was, however, much larger and much wider compared to most of the other countries, in fact, compared to all the other countries. The Global FINTECH Database 2021 reported a significant increase in financial inclusion around the world. And especially in, around the world. In developing countries, 71% of people have bank accounts, up from 42% a decade ago. Approximately 40% of people who made a digital payment from their account to a merchant or to a utility service did so for the first time since the start of the COVID-19 pandemic. In India, the pandemic accelerated the push towards digitalization, especially in the rural areas. The period from March 2020 to August 2022, that is March of, when the COVID began in 2020, from March till August this year, this period has seen a massive growth of 427% in UPI transactions alone, which reached a new high of 657 crore transactions in August 2022 alone. The number of UPI QR code enabled payment acceptance points increased by about 9 crore, which constitutes about 86% year on year, to reach 20 crore at the end of July 2022, reflecting the growing acceptance and preference for contactless payments. I would now like to touch upon some of the innovations in our financial sector. These are areas where the RBI in some way or the other has been directly or rather closely associated with. The financial services in industry in India has seen enormous transformation. Products like internet and mobile banking, electronic funds transfer, UPI, Aadhaar KYC, Bharat Bill Payment System, BBPS, QR scan and pay, digital prepaid instruments, and similar other initiatives have transformed the traditional banking operations. Banking hours have indeed been transcended. We now have digital, mobile, anywhere, anytime banking in our country. While several initiatives originated from the industry, the government and the regulators have created an enabling ecosystem to promote the fintech sector in the country. Initiatives like the Startup India, Digital India, the India Stack, account aggregators, peer-to-peer, that is P2P lending platforms, and 24/7 digital payment systems have proved to be key enablers in all these initiatives. The fintech ecosystem in India has indeed evolved and is poised for a giant leap. Let me now touch upon some of the other initiatives taken specifically by the Reserve Bank in this area. The regulatory sandbox framework was released in August 2019 with a view to foster innovation. With this, the Reserve Bank entered the select group of countries that have their very own regulatory sandbox ecosystem. After 4 theme-based cohorts on retail payments, number 1, cross-border payments, number 2, MSME lending, number 3, and prevention of financial frauds, number 4, a theme neutral 5th cohort was announced earlier this month. So that means it is theme neutral, it is open, and it is for the participants, the fintech players, to come with their original idea, whichever be the space. Earlier we were prescribing the cohort that we would like to have some initiatives in, let us say, in MSME sector and the like. Now it is open. So it's, if anybody has a new idea and works to work on a new product in a regulated, regulated environment, please approach the Reserve Bank, and our teams will examine your proposal and we will see how best we can carry it forward. So this theme, theme neutral 5th cohort has actually expanded the scope of the regulatory sandbox activity that we initiated in 2019. Now it reflects the Reserve Bank's keen desire to increase the footprint of innovation in the entire fintech space. The success stories emanating from our regulatory sandbox initiative include, among several other initiatives, they include the framework for facilitating small value digital payments in offline mode and the recently launched UPI 123 Pay, which was aimed at enhancing digital financial inclusion by enabling over 40 crore feature phone users to access the benefits of UPI in a safe and secure manner. The Reserve Bank, similarly, another initiative, the Reserve Bank for the first time organized a global hackathon titled Harbinger 2021 with a view to make retail payments more innovative. This witnessed very enthusiastic response. We received totally 363 proposals, including 22 from abroad, from countries like the United States and the United Kingdom. So 363 minus 22, the rest were responses received from players who are located within India. Now this exercise indeed gave us a glimpse of the creative talent pool that India possesses and reinforced our belief that India is well positioned to provide leadership in the fintech space. I understand that the winners of Harbinger 2021, all of them, or at least some of them, are also participating in this global FinTech festival to further showcase their creativity and talent. More recently, the Reserve Bank has set up the Reserve Bank Innovation Hub as a subsidiary in Bengaluru. The hub has an eminent board of directors drawn from the private sector and domain experts. You may be aware that Chris Gopal Krishnan is chairing the board of directors, and we have other experts and players from the domain experts from the private sector. The Reserve Bank is just playing a facilitating role, and it is entirely left, there is complete autonomy so far as the functioning of the Innovation Hub is concerned. The RBI, the Reserve Bank Innovation Hub, is currently undertaking several important projects. I am confident that going forward, this Innovation Hub will benchmark itself as a center of excellence. They have developed one particular product or a process. I will come to it a little later during the course of my speech today. We have also created a new FinTech department within the Reserve Bank from January this year to have focused attention, to give focused attention to this evolving and dynamic sector. The objective of this department is not only to promote innovation, but also to identify the associated challenges and opportunities and address them in a timely manner. All matters relating to facilitation of constructive innovations and incubations in the fintech space with wider implications for the financial sector and the markets are being dealt with by this department in addition to regulatory issues, interregulatory issues, and international cooperation. Further, as you would be aware, the Reserve Bank is now working on the central bank digital currency, and we are working towards having a phased implementation of the CBDCs, both in the wholesale and in the retail segments. We propose to first try it out in the wholesale segment before we move and before we enter into the retail segments, but the pilots will be carried out. In fact, it will be a pilot is not the right word, but it's a kind of a phased implementation that we are looking at. Now, this is expected to give further fillip to the digital ecosystem in our country. Now, having just explained briefly the various initiatives that the Reserve Bank has taken, let me now focus on FinTech, the road ahead so far as FinTech is concerned. It is known that, it is very well known that FinTechs contribute to enhance efficiency in terms of service delivery and in bringing down costs. Through their customized products and customer interfaces, they provide an enriching and seamless consumer experience. They also have the potential to improve market access and a range of product offerings, apart from improving access to credit and financial inclusion in the traditionally unserved or underserved segments. In India, one of the most transformative roles that can be played by FinTech is in the area of credit delivery, in partnership with the traditional lenders, especially in the rural and semi-urban areas. Timely availability of credit at reasonable cost, especially for agriculture and allied activities and MSMEs, is very crucial for our economic growth. One of the key challenges currently associated with availment of such credit is that it's a largely paper-based process with high turnaround time. Sometimes it even requires multiple visits to branches of the banks. And it also requires at times several kinds of documentation, some of which can be cumbersome. Now, it also entails high operational costs for the lenders and opportunity cost for the borrowers, because a small farmer, every time he goes to a bank branch, obviously that particular day or that particular half a day or 2 hours or 3 hours, he's not able to work on his fields. So there is an opportunity cost from that limited point of view as well as from other point of view so far as the farmers are concerned. It also involves costs of various types to the lending institution. Now, considering these challenges and taking forward the Reserve Bank's FinTech initiatives, digitalization of agri-finance in India was ideated between the Reserve Bank and the Reserve Bank Innovation Hub. The idea was to enable frictionless delivery of Kisan Credit Card loans, that is KCC loans, in a paperless and hassle-free manner, and also reduce the turnaround time and avoid multiple visits to bank branches. I am happy to state that the Reserve Bank Innovation Hub has designed an end-to-end digital process. I repeat, the Reserve Bank Innovation Hub has designed an end-to-end digital process for seamless and quick access to rural credit. A pilot project based on this innovation has been launched in Madhya Pradesh and Tamil Nadu yesterday in partnership with the Union Bank and the Federal Bank respectively. For both new KYC loans, that is fresh KCC loans, for the new Kisan credit card based loans, as well as for renewal of such loans which had been sanctioned and disbursed earlier up to a threshold of rupees 1,60,000 per borrower. Going forward, based on the learnings from the pilot, the digitalization of KCC loans is proposed to be expanded to all districts of these two states, and not just that, but also to other states. It also depends a lot on the level of digitalization of the land records in various states. We are, the Reserve Bank and the Innovation Hub, we are in constant touch with various state governments, And there are other state governments also where the level of digitalization of land records is, it's in a very advanced and a very high level of, it has achieved excellent progress. So going forward, depending on the level of digitization, the digitalization of the land records of the states, depending on the success of these two pilots and depending on the learnings and the experience that we find in these two pilots, or if there are any loose ends or gaps, they have to be plugged. So depending on this experience, it will be expanded to the entire Madhya Pradesh, the states of Madhya Pradesh and Tamil Nadu, and also to other states. Eventually, our desire is to develop and operationalize an integrated and standardized technological platform to facilitate frictionless credit to all the segments of society for the whole country, with special emphasis on rural and agricultural credit. And let me say that if we can do this in the next 1 year, which we hope to do, it would be a major milestone in India's growth story and journey towards India at 2047. Another example of tech-enabled regulatory innovation by the Reserve Bank is the account aggregator framework. This is an important step towards realizing the potential of empowering millions of underserved customers to digitally access and share their financial data across institutions in a secure and efficient manner. The framework has been expanded, in the recent months, the framework has been expanded to include institutions regulated by the SEBI, the IRDAI, and the PFRDA. This is a progressive step to help customers gain control over their financial data and use it for accessing a variety of products, including credit, insurance, investments for their own benefit. Centralized KYC and video KYC are other enablers to facilitate seamless onboarding of customers in a digital and cost-effective manner. We are giving greater focus to these initiatives. The Reserve Bank is committed to take more such initiatives with the support of all stakeholders like you. In this endeavor and in collaboration with the stakeholders, 3 exciting new products are being launched later today, immediately after this particular event. That is, immediately after my address is over. Now, 2 of these pertain to enhancing the feature set of UPI by facilitating small value offline transactions through UPI Lite and linking credit cards to UPI. The third initiative is the enablement of cross-border inward bill payments using the Bharat Bill Payment System, that is the BBPS. Eventually, our desire is to, the emergence of fintech players, the emergence of fintech players and the growing popularity of their innovative products have challenged the existing players in the financial services in maintaining their market share, margins, and customer base. The incumbent firms are responding to these challenges by adopting various strategies which include making investments in fintech companies and also partnering with them. They are also enhancing their in-house capabilities to adapt to the new realities. A wave of changes brought about by the fintech companies have had a positive impact in terms of enhancing inclusion and further penetration of financial services. At the same time, these developments have also ushered in an era where enormous amount of consumer data is being generated and leveraged upon by a few entities, that is the so-called big techs, by virtue of their huge customer base. Such developments, while being very much welcome, they also raise concerns on concentration risk and potential spillovers as their level of engagement with the financial system strengthens in the years to come. Therefore, potential risks to public policy objectives of maintaining competition, market and business conduct, operational resilience, data privacy, cybersecurity, and financial stability also need closer attention. As we have seen, the way digital lending has taken off in the recent past was phenomenal. While it has served the needs of various segments, it has also raised several concerns which manifested itself through spate of complaints regarding usurious interest rates, unethical recovery practices, and sometimes or quite often data privacy issues. The Reserve Bank has endeavored to address these issues proactively, and as early as June of 2020, regulatory guidance was provided to our regulated entities. Now, these guidance, among other things, mandated that digital lending platforms disclose the names of the banks or NBFCs upfront on whose behalf they were providing the credit. The recently issued regulatory guidelines on digital lending strive a well-considered balance between customer protection and business conduct on the one hand and supporting innovation on the other. Let me emphasize that while innovations are very much welcome, and I say it with all the emphasis at my command, that while innovations are very much welcome and the Reserve Bank will continue to be supportive of it and the Reserve Bank will welcome it, and we will in fact go 2 steps forward to discuss with you if you just come 1 step forward. But having said that, while all these are there and all these are a part of our agenda and our scheme of things and our thinking, now these innovations also must be responsible and should enhance the efficiency and resiliency of the financial system while benefiting the consumers. Robust internal product and service assurance frameworks, together with fair and transparent governance, will go a long way to safeguard the interest of the customers and ensure long-term sustainability of the fintech entities themselves. The level of due diligence and oversight exercised by the regulated entities on their outsourced activities need to be strengthened further. This would help in proactive mitigation of risks at the incipient stage itself. I would also like to flag certain material concerns regarding the unbridled mushrooming of digital lending apps. The need of the hour is to ensure assurance of safety after following a process of green lighting or whitelisting and due diligence by the regulated entities. The Reserve Bank, in associated with other relevant agencies, is taking steps to address this issue and take further steps as may be necessary. As we continue to support technological advancement and innovation, it is equally important that adequate attention is also placed on governance and conduct issues. I have already touched upon it, but just I want to add once again that at the end of the day, I want to emphasize that at the end of the day, sustainability of any fintech activity or business is about enhanced customer protection, better cybersecurity and resilience, managing financial integrity, and strong data protection. I wish to assure, and I just said this a little while ago, I wish to assure all of you, the fintech community, that the Reserve Bank will continue to encourage and support innovation. At the same time, we should expect the ecosystem to pay attention to governance, business conduct, regulatory compliance, and risk mitigation frameworks. The fintech road ahead will witness ever-growing traffic in addition to the existing players who are already there. It is therefore imperative that every player on this road follows the traffic rules for his or her own safety and the safety of the others. Let me now conclude by stating that a sustainable financial world is not just for us, it is for the future generations also. It is up to us how we want to move forward in this journey. The Reserve Bank's focus has always been on encouraging innovation by providing an enabling environment. Simultaneously, as the guardian of financial stability in the country, the Reserve Bank also remains watchful of any undue risk build-up and responds to them from time to time or as may be necessary. The fintech players like you, I am sure, will join us in this endeavor. With the amazing talent base that we have in India and the giant leaps we have taken in the digital and fintech space in recent years, I am confident that India is well poised to shape the future course in this area. As we set sail for a brighter future, I wish you all a safe and fulfilling journey ahead. Thank you very much.